right, welcome to the Tech Corner. I'm George Tsilis, Senior Markets Contributor with the Schwab Network. Thanks for joining us today. And we're actually going to feature Apple Incorporated, take a look at its most recent earnings call on January 30th, as well as provide an outlook on the business conditions and the overall health of this mega cap company. One of the things about Apple is there's some challenges potentially to the underlying business, considering geopolitical risks and tariffs associated with the Trump administration in China. But if we take a look at the earnings, overall, they were quite robust. They did post about $2.40 per share on an adjusted basis. Those earnings were higher by about 10% on a year-over-year clip. You take a look at sales, that number actually posted about $124 billion for the quarter. It's a record quarter for Apple. Sales numbers were higher by about 4%. Some of the highlights to the business and lowlights are as follows. Taking into consideration that the iPhone product, which represents about 50% of their sales, that number was actually slightly lower by 0.8% compared to the same quarter last year. But one of the highlights of the underlying business is services. Services revenue actually grew about 14%, but the profitability metrics associated with services is really where the highlight was. So what's happening with Apple is over time, the company may be demonstrating some decelerating growth in their product, but services growth is really where the bright spot is in terms of the sales in total, as well as margins going forward. A couple of lowlights happen to have actually been China. They did denote, as a system-wide business, sales in China were down about 11%. But overall, one of the things about China's sales, or Apple sales to China, it does represent less than 15%. Now, there are some concerns about tariffs. And ideally speaking, going back to 2018, when the Trump administration placed tariffs on China, there was an exclusion for Apple. There's a possibility that is going to be the case for the company going forward in this round or during this administration. However, one of the things that Bank of America, which did maintain a $265 price rating on the stock, suggested is that the company itself has the ability to produce about 80% of its product for the American market overseas outside of China, as well as some of the benefits maybe the Trump administration will provide from a Department of Justice antitrust standpoint, considering their more favorable stance on regulatory conditions. Now, the other thing about Apple, if we do consider some of the profitability metrics of the underlying business, like I said, services gross margins were higher by about 75%. Total system-wide, the company is generating over the past 4 quarters about 46% gross margins, and that's about 400 basis points in their 5-year average. So that suggests the company does have pricing power, which remains intact. There is a little bit of a question about valuation. Now, if we take a look at valuation for Apple, currently, based upon the earnings estimates for 2025, on an adjusted basis, around $7.35. The stock is trading around 31 times fiscal year 2025's earnings, a little bit higher considering the 5-year average of $28. But nonetheless, the company is still expected to grow its earnings by about 7.5%, as well as top-line sales around 7% as well. Now, taking a look at the technical analysis of Apple, obviously the stock has pulled back post-earnings, with the stock down about 5% over the last month. We have to look at it at the established trend. Obviously, if we take into consideration a longer-term trend, Apple is still trading above its 200-day moving average. One of the things you got to keep in mind is the intermediate trend. And the intermediate trend, using a baseline of the 50-period moving average, the stock is trading below that, which again suggests that the bullish trend on the long-term basis is still intact. However, right now the intermediate trend is rather inconclusive. Now, in conclusion for Apple, things look rather promising according to Tim Cook. He suggests that we're going to see, as a business, $100 billion in services revenue. Now, keep in mind, services revenues is where the growth is for Apple. The gross margins of that component of their business is the highest, around 75%. And that number alone suggests it's very profitable compared to major tech companies across the entire tech ecosystem. The other factor is Apple Intelligence. These are new features that they're going to be rolling out and integrating across multiple devices and all-encompassing services. Some of the challenges we have to keep in mind potentially is China. We don't necessarily know the outcome of the tariffs, nor how it will impact Apple's business overall. But nonetheless, growth in earnings and sales are still expected to be robust, somewhere in the mid to high single digits. All right, taking a look at next week, we'll be evaluating Supermicro Incorporated. This is the high-performance server company that has been in the news over the past year and a half, alongside greats out there, NVIDIA Incorporated. One of the things we got to keep in mind about Supermicro is there's some challenges to the underlying business considering reporting issues. The stock has been to the downside over the past few quarters, but they're going to provide us a business update on Tuesday, so we'll evaluate that company afterwards. Keep in mind, next week, other companies that will be reporting earnings include Reddit, the social media company, on Wednesday, cybersecurity behemoth Palo Alto on Wednesday, as well as data infrastructure company Datadog on Thursday as well. Thanks for joining us for Tech Corner. I'll see you next week.